Okay, we will make a start. I'm sure there are a few more people will join as we move along. Welcome everybody to this webinar being hosted by the Academy of Construction and Real Estate and the Royal Institution of Chartered Surveyors on valuation, a risk management tool to combat fraud, corruption, and money laundering. Thank you again for your time this morning, Ben. The presentation this morning will be made by Ben Elder. Ben is a global leader in valuation, having worked extensively globally in advising clients, governments, and non-governmental organizations on a host of valuation issues. He is well qualified for his role as an economist and a chartered surveyor with an interest in the interface of the economy and property markets, and is the author of a chapter in the Rutledge Handbook on Sustainable Real Estate. Ben has been a practicing valuer and respected academic and has held senior positions at Nottingham Trent University and the College of Estate Management. He is an immediate past chair of the IVSC Tangible Assets Board and a member of the Standards Board. Ben is also an immediate past chair of Commission 9 Valuation for the International Federation of Surveyors, or the FIG. He's recently been working with a team on developing a manual and toolkit on the valuation of unregistered land for the UN Habitat and the FIG. With that, Ben, I'll hand over to you. I look forward to your presentation this morning. Just a bit of housekeeping. If you can hold your questions to the end, then I think once the presentation is complete, we will have a short session for question and answers. If you do want to put your questions into the chat box, please do so, and I will then access that after Ben's finished the presentation, and we can go through that as well. Thank you. With that, Ben.
Great, thanks, TC. That's great to be here. Thank you for the invitation. It's 9 o'clock in the UK, so I think it's around lunchtime for you, 11, 12 o'clock. So I'm between you and your lunch, so I'll hopefully try to make this an interactive session where we can pick some questions up and really start to examine what is a really difficult problem. I'll start the presentation by saying there are no easy answers to this, and it requires a lot of due diligence to try to identify these illegal acts of fraud, money laundering, corruption, and obviously the participants in those areas are doing their best. It seems very simple to say, but doing their best to hide what they're doing. So it's a matter of all of us as professionals to try to identify where there are unusual trends, unusual instances which might trigger some concern that these activities are actually happening. And particularly as real estate is used as a vehicle for cleansing dirty money, so from moving illegal tender through a system and then coming out the other side with a transactionable clean money through real estate is widespread, and we as professionals in this space need to be alert and aware and consider the issues as they arise. So we are a key player in this process, and it's part of our duty as a public interest profession to make sure that we do all we can to try to root out these obnoxious practices. I've got a few slides to share with you this morning, and I'll try and do that without losing them all together, which I managed to do on Monday when I was doing another presentation, but seem to have got them up there now. I hope that you can all see those if I move it into slide mode. So there are sort of 8 or 9 issues around this space, and sorry, my telephone's going as well, which is not good. Let me just switch that off. So just turn that one off. Apologies for that. Should have turned that off before I started. But moving forward, RICS has some global guidance on countering bribery, corruption, money laundering and terrorist financing. It's a global document, and I'll just touch on some of the items which RICS expect of their member firms and their members, not just in valuation, but across the disciplines, so including the construction side as well as the property management process. This document's freely available, can be downloaded. I've put a reference on the last slide. So again, happy to have these slides shared with you so that you can pick up the references and the documents as we go through. The first one I want to just sort of point on some of the requirements regarding money laundering and terrorist financing for regulated firms. So these are firms which are regulated by the RICS. I would contend that they're good practice to whatever professional body you are affiliated to, and I would expect that many of your organizations have got similar documents, but these are the documents that that we use, and it really just focuses in on the issues and what can be done to identify, and probably equally as important is to be able to demonstrate that you as professionals have actually considered this in every job that you do. So it's a matter of keeping this consistent approach to delivering the issues and the consistency of being vigilant all the time. And what we require of RICS regulated firms is that they have a written policy addressing money laundering and terrorist finance risks. So actually for the company to have a policy about how they deal with money laundering and terrorist financing, and the processes that they expect their employees to take through that process. As I say, it's obviously there to create the due diligence, but it's also there to create an audit trail that if you were ever challenged on this issue, you can demonstrate back the steps that you took to consider the possibilities. The fact that it wasn't actually picked up is then a fact in degree, but at least you've made the attempt to be able to have a documentation that actually it gives you that assurance that if you are challenged at a later date, that you can point to the processes which you have in place, and equally they were actually applied. So you need to have an appropriate governance system and controls in place. And we'll come back to governance in a few minutes when we look at the revisions to the international valuation standards and the requirements around governance of valuation, which are going to come into place in the new year with the revised IVSs. And you need to have appropriate reoccurring training for staff. So having regular training for your staff. As an RICS member, I have to undertake money laundering training once a year. So we are required to undertake a module, online module, once a year to ensure that we have the ability to identify inconsistencies which then might be suspicious of money laundering and terrorist financing. So we need to also, the firms need to keep reports of suspicions of money laundering and terrorist financing. So having a process of recording when there might be some suspicion. So that staff don't just sort of either keep it to themselves that this might be a suspicious deal. There needs to be a process of actually recording that and perhaps passing it up the line to management. Identify the beneficial owners of any company. Now that's a pretty big ask of anybody, to identify the beneficial owners of a company or client involved within a transaction. It might be fairly obvious, but for example, if you are doing a valuation for a bank for secured lending, you might not know very much about the applicant for the loan. So again, understanding what the purpose of the valuation is absolutely critical to being able to identify abnormal issues which might be associated with money laundering and terrorist financing. You need to appoint a senior person within the organization to take responsibility for ensuring anti-money laundering and counter-terrorist financing policies are in place and complied with. So again, within the organization, you need to be able to point to a senior person who takes that responsibility for the policy and making sure that it's implemented. So some quite big requirements there on firms, regulated firms, to capture data and information and make specific inquiries regarding the work that they're undertaking. If we now turn to looking at the individual member, so RICS members, so the first part was about the firm, this is about the individual taking responsibility. So the individual member should keep abreast of current training regulations offered to them by their employer or by other parties regarding money laundering and terrorist financing. So again, there's an individual responsibility as well as the actual company providing the opportunity for that to happen. They need to comply with the employer's policy and processes relating to money laundering and terrorist financing. So the individual again has that responsibility to record any suspicious transactions or whatever it is that the employer's policy and processes require. They need to keep reports of suspicious of money laundering. So again, and keep it in a confidential way. So keep reports of suspicion of money laundering and terrorist financing activity confidential, but it doesn't stop them pushing that up the chain to decision makers. And being able to identify the senior person who is in the leadership role who has that responsibility. Again, going back to what we said in the first slide, looking at the company having a responsible person for the application of the policy, etc. So the staff need to know who that individual is and the way that they're able to contact the individual. Okay, so turning from that sort of policy process for being able to identify potential illegal activities, I just wanted to pick up this slide here, and some of you may have seen this before. It's about international standards, and really what international standards do is create a common language across borders. The International Financial Reporting Standards are now law in over 140 countries. So if you don't apply with those financial reporting regulations, you could find that you are actually in prison. So complying with the IFRSs is a really critical part of any financial system. But it's quite interesting to step back and understand that the IFRSs started where the understanding, the cross-border understanding of financial reports from companies was very, very difficult. And you found that companies were recording their financial performance in different ways in individual countries. And that made it very expensive to actually compare items like for like. So the structure of the International Financial Reporting Standards create this framework so that company accounts are basically created in the same way, so that there's an understanding that if you're looking at a company from the US or from, well, US and UK and South Africa, there's a structure around the financial reportings which is a common understanding. And that common understanding starts to bring transparency into the whole process of financial reporting. It brings that clarity which is required for understanding. But at the same time, that creates that clarity where it's much more difficult to hide illegal activities. So the international standards have a really key part to play in this whole process. And IFRS are one side. On the slide I've got there, it identifies the international valuation standards because.
Ben, sorry to interrupt.
Yeah. No, sorry. Yeah, sure.
Your slides, I'm not sure if the others are having the same problem, but the slides don't seem to be progressing.
Right. Okay. I am on a slide with.
You're still on the title. There we go. Now I can see it change.
Okay, you should have one with.
But now I've got your presentation view with your notes on it as well.
See whether we can change that. Apologies. Sharing screen. Okay, so let's try. What does that one do? Switches it off. That's okay. Now you are sharing. I can't change the view, unfortunately. That's the only one I've got. So can you see it, TC? Can you see the slides, or is it?
You can see the slide. I can see your slide, and your next slide is on the side with your notes.
Okay. Yeah. So you're coming off that screen there. Okay, I've got. I don't know how you actually.
You might just need to go to the top and see if you can change your display settings.
That's what I was just trying to do, but it says there's only one share, so can't see how to get rid of that, I'm afraid. Shall I continue, and then as long as you can see the slides and you don't
that's
cheat.
Fine. I think we can see the slides. It's fine.
As long as you don't cheat too much and look at the second one before it arrives. So we don't want any answers coming up before they arrive. So
go for it.
Thanks, DC. So the international financial reporting standards create the financial reporting structure, but feeding into those international financial reporting standards are obviously valuations, and that again creates that clarity around the story which is being told by the valuer, which is then understood into the financial reporting standards. And then we've got some other international standards which sit in this same bubble. The International Property Measurement Standards, looking at a consistent way of measuring property. If you just think that perhaps on a property company, if they're reporting their financial position in their IFRSs, and they've got a valuation in there, and the property is measured to international property measurement standards, you're starting to see an audit trail through the international standards that if there were irregularities, then those irregularities would start to show up. Because there wouldn't be the consistency in the data which was then driving the decisions. And the same with the International Construction Measurement Standards, that they are a set of requirements for construction, process of actually pulling together bills of quantity, etc., so that there's a consistent way in actually identifying the construction costs, which then feed into valuation, which then feed into the IFRSs. And also the international land measurement standards, that's not about measuring land. We've been pretty good at measuring land for a long time. It's about actually identifying how the land is occupied, the tenure status, And again, as TC kindly said, I've been working on some manuals for the valuation of unregistered land. So sort of trying to understand actually what that tenure might mean to the value of land or buildings, and then how those again feed back into the actual structure of the organization or the whole process. But critically, again, those are wrapped up with ethical requirements, all of those processes, because again, without that ethical background, these muddy waters, as I once wrote, the muddy waters of is where corruption can hide. The muddy waters of inconsistency is where corruption can hide. And if we keep those pools of water as clear as possible, it makes it much more difficult for illegal activities to take place. And hopefully this will move on to the next one now. Yep, okay. The international valuation standards, they're being updated. They've been rewritten this year. They're going to be published in January. So these slides are actually taken from the consultation document, but I understand from the IVSC that this is basically the process that will be incorporated into the new standards. Basically, if you see the bubbles at the bottom there, so there's going to be the valuation framework, then there's the scope of works. So this is taking you, the valuer, but also the client through the process of creating a IVSC compliant valuation. So there's a valuation framework, then you have to agree your scope of work or your terms of reference. You then agree a basis of value. Is the valuation to market value, investment value, fair value? What is it that you're being asked to calculate as the valuer? And that is really critical, because that's about understanding the purpose of the valuation. What is the client going to use this valuation for? And if we just turn our minds back to these illegal activities, this is often where that first question should be clicking off in the brain, saying, actually, is this a legitimate purpose that this valuation is going to be put forward for? And this is where you have the opportunity to understand what the client's objectives are, understand what the who the client is, and being able to start to formulate some opinion about whether this has got any illegal elements attached to it. You then take that basis of value and you decide the valuation approach that you are going to take. And this is a slight difference in the international valuation standards. That there were valuation approaches before, but they were tied up with methods. So it's been separated out to become a separate chapter on valuation approaches, which would normally be the income approach, the market approach, or the cost approach. But all those three tying back to the basis of value. And so again, if you get some strange request to use an approach in a particular way, in a particular circumstance from a client, one should start to question, actually, that's the valuer's decision about what approach should be adopted. So again, if you're getting pressure from a particular element to use a particular approach, one might start to want to make further investigations about why that client particularly wants you to use an income approach when actually a market approach might be more normal, or perhaps even the cost approach, because if there's market evidence, the cost approach is usually seen as the last resort, and the cost approach to get to market value rather than a construction cost. So again, that difference between cost and value is absolutely critical. And sometimes these organizations might not understand those differences. But again, I'm sure that there are some people sitting there thinking actually some of these organizations who are involved in money laundering, etc., are extremely sophisticated. And again, you have to recognize that that is the case, but be aware and see and look for any possible chinks in the armor. And again, I guess some of the valuers are sitting there sort of thinking, well, how do we do that every time? We don't get paid enough to do all of this. I understand all those arguments, but this is obviously a serious legislative issue that we need to be part of the solution to. So we move from valuation approaches through to the data and inputs. So what data and inputs are we going to put into the model which follows? So we capture the data and inputs, and then we put those data and inputs into a valuation model. Might be a discounted cash flow. It might be a more comparable model. But the model is the sort of the process which creates the estimate of value. So you put it into the appropriate model. And then we've got a separate section now on documentation and reporting. So again, being able to capture all that documentation and your reporting processes. So that's the basic principle of carrying out evaluation under the International Valuation Standards. They've then got the specific requirements for different assets. And that includes, and the new International Valuation Standards is targeted at tangible assets, so real estate, plant and machinery, etc. Anything that you can touch. But it's also got a good big section on business valuations, so specific requirements for business valuations, and now a section on financial instruments. And it's that issue about when you do your due diligence in a valuation process, which has caused the International Valuation Standards quite a headache to deal with, because when in real estate and tangible assets, plant and machinery, etc., you tend to do a lot of the due diligence for evaluation towards the end of the process. You look at your results and you, before you sign that valuation report, you take a deep breath and decide whether it's actually correct and you've covered all the issues. The point is about financial instruments, to jump to the other end of the scale, is all that due diligence is done at the very beginning in the selection of the model and the selection of the data. Because the valuation flies out to hundreds of banks and the press of a button every hour during the day in some circumstances. So there isn't that opportunity to do the due diligence, which we as tangible asset valuers tend to do towards the end of the process. So that needs to be done at the front. What the International Valuation Standards don't tell you is when you need to do that due diligence, but it must be done in that whole process. And then you get an IVSC compliant valuation if you followed those steps. So what I'm really trying to say to you is each of those steps, there is the opportunity for the valuer just to step back and say, are there any undue pressures which are being applied to me, which might lead me to think that the purpose of this valuation isn't normal, needs further investigations, etc. And I'm not necessarily saying it's the valuer's job to actually make those investigations, but it may be appropriate to flag them to the through the processes which I've already identified, which should exist within firms to alert the appropriate authorities or perhaps the legal counsel within the transaction about some concerns. So really, we become the eyes and the ears of the process to be able to identify if there are any, I nearly said suspicious issues, any issues which start to alert us that things perhaps aren't normal. just sort of taking a step back, the RICS publish our Red Book, our valuation standards, and we incorporate the international valuation standards into our Red Book. So if you follow the Red Book, they will be the valuation will be compliant with the international standards. But really, what the Red Book produces is a framework for delivery of valuations. It gives the next level down from the international valuation standards, and it creates this framework which also can be regulated. So again, we're able to look at the process which the valuer has undertaken, and I sometimes look at it as sort of saying the international valuation standards are flying at 30,000 feet. The global Red Book sort of 15 to 20,000 feet, because it provides that next granular level of detail about what valuers need to do. And then underneath that, RICS issue a wide range of individual guidance or practice information. And that creates this framework. And again, if we're using and following those guidance notes, they're principle based, but they start to create this network, this matrix of best practice. And again, if there's pressure at any point to deviate from that best practice, then that starts to alert an individual that there may be some other issues in dealing with this, or maybe some suspicious circumstances. So the purpose of the Red Book is to provide an effective framework within the rules of conduct of the RICS. So again, one of the reasons we create the Global Red Book is because we can't allow another organization to set standards for our members. So we have to set our own requirements for our own members, but we do ensure that they are consistent with the international valuation standards. And actually, we reprint the international valuation standards in the back of the Global Red Book to ensure that there is that connectivity between the processes. The Red Book comprises of quality assurance and compliance requirements. It is not a textbook on how to do valuations. So, but again, that quality assurance process keeps this clarity and certainty about how the valuation has been undertaken, and therefore that makes it much more difficult for corruption or illegal use to hide within the valuation process. We then also create national supplements. So, for example, I've got on that slide that we've created the UK supplement, which actually requires a rotation of valuers in the UK for financial reporting. So again, this rotation of people who look at the valuation starts to create a bigger barrier for illegal uses to use the financial reporting systems, because there's somebody else looking at these numbers on a regular basis. So and that also applies obviously to the audit profession. So that rotation of people who are involved in financial reporting valuations is really critical to being able to root out some of the corrupt practices or illegal practices which might exist. So that changing of the guard is a really important thing. And then we've got some global practice statements, for example, like the discounted cash flow global paper that we've just released, again, giving that clarity about how and when particular methods should be adopted within the valuation process. And if they are not, then again, suspicions should start to be raised. Excuse me. Just wanted to spend just a few moments looking at some of the changes within the international valuation standards. And one of the new chapters is a more detailed analysis of data and inputs. So again, this starts to look at the characteristics of suitable data and inputs. And again, when we start to get these definitions, it creates this clarity in the storytelling, so that if somebody challenges the valuer and says, why did you adopt that piece of data and those inputs, the valuer's got a record of why and how they chose those data points. And so the characteristics of suitable data and inputs into evaluation. So accurate data and inputs are free from error and bias and reflect the characteristics that they are designed to measure. So again, this starts to be able to classify and clarify some of the data characteristics that we will need to start to record as valuers. It needs to be appropriate. Data and inputs are relevant for the asset or the liability being valued. Again, if they're not, that should start to raise some questions about the legitimacy of the purpose of the valuation. But and I'll reiterate what I said a few minutes ago, that I appreciate that actually some of these clients who are involved in illegal activities are very sophisticated, and they will make sure that they don't compromise the process. So it's about the valuer also being vigilant for the whole process. Data and inputs, they need to be complete. A complete set of data and inputs are sufficient to address the attributes of the asset or the liability. So they need to be complete, the inputs and the data. They also need to be observable. Data inputs are obtainable and visible to multiple users or market participants. So again, that one starts to prevent the black box issue of saying, well, yes, this is my opinion, but I'm not going to tell anybody how I've actually got to that opinion. These have got to be observable by multiple users or multiple market participants. Doesn't mean to say it's actually got to be freely available within the market, but it does mean that there is actually a requirement that you tell the story and explain how you've captured your data and which pieces of data you've used. Timely. Data and inputs reflect the market conditions as of the valuation date. So again, there might need to be some adjustments to those, but if you're going to make those adjustments, then you need to be able to you must record how and why you've made those adjustments to the data and the inputs that you're using. And critically transparent. The source of the data and inputs can be traced from their origin. So it's this clarity of the story, this clearing of the water, so that it makes it much more difficult for illegal use to hide behind a valuation process which is not transparent and clear. So again, these are some quite big challenges to the valuation industry to be able to move and action these new, perhaps not new, but reiterated requirements. But they've been stated much more clearly in the new international valuation standards than they were previously. The other new chapter is 105 in valuation models. Again, characteristics of sustainable valuation models, and you'll notice they're virtually the same headings that we've just been through. So there's an accuracy. The valuation model is free from error and functions in a manner consistent with the objectives of the valuation. So again, if there are questions around which model you adopt and use, this process needs to be questioned. So looking at that issue of accuracy and appropriateness. So looking again at whether the valuation model is suitable for the asset or the liability being valued. given market conditions at the valuation date. So is the pressure being placed to use a particular valuation model which is not appropriate for the use for the asset? So again, that might start to raise some concerns in the mind of the valuer. Completeness: the valuation model addresses all the features of the asset and or liability to determine its value. So again, this issue about not doing part but actually having a complete picture of the asset or liability which is being valued and addresses all the features. May be positive, may be negative. So again, that clarity around the valuation model. Timeliness: the valuation model reflects the market conditions as of the valuation date. So again, just remembering that this is also applicable to financial instruments and business valuations, as well as real estate. This timeliness of the model to reflect the market conditions. For example, obviously the hike in interest rates is causing all sorts of challenges to valuation at the moment around the globe. The increased interest rates, very few transactions actually occurring. But actually, when you're doing the valuation, does that mean that there are that the value stayed the same because there's no transaction? I don't think so. I think that obviously the values have changed because the income flows are very likely to have changed. And sometimes we've seen that there's been an increase in illegal activity when markets are slower. So again, when there's an opportunity perhaps to buy trophy assets which wouldn't be available in normal times, sometimes there are increased activities in particular types of real estate and assets when the market goes into these difficult changing periods. So again, perhaps additional vigilance is required. And then transparency. All persons preparing and relying on the valuation model must understand how the valuation model works and its inherent limitations. So again, that transparency process being applied to one part of the valuation process. But so these are some of the changes which are being introduced into the international valuation standards as of next year, and they are all designed to help to create this clear storytelling about a valuation and how it's been put together and the elements that have been considered and perhaps rejected, but been considered and why they've been rejected and what has been included has been included. So the international valuation standards, the international financial reporting standards, it's about creating this common language. And when you have a common language, it becomes more difficult for these illegal activities to hide. But I do reiterate that actually the more sophisticated nearly individuals or organizations who are involved in this heinous crime are very sophisticated. So it does become very difficult to actually identify some of these issues. I always remember a story about in the UK that there's now a requirement on estate agents for people who are buying a house. So when they apply for a mortgage, that the estate agent is supposed to verify their legitimacy, and one of the way they do that is to see an applicant's passport. And I always remember having a conversation with an estate agent, and he said, yeah, I do it, but it's pretty pointless, because if somebody wanted to money launder through getting a mortgage, don't you think they'd also be able to get a false passport? And I don't know what a false passport looks like. So you can sort of see some of the complexities and some of the challenges which you face. But having said that, the seriousness of this, these criminal activities need us to play our role in them, but we shouldn't be doing them in that perfunctory way of, like the person I was talking to, they see the passport, they just open the page, look at it and close it and pass it back. Needs to be a more diligent process which is incorporated into that process. But we are only one cog in the wheel, and the legal profession and other parties have a real part to play in this. But I don't think that we can ignore our role in trying to root out these activities, particularly as real estate is used as such a money cleansing process globally. So I'm going to draw breath there. That's the reference to the bribery and corruption document, which is on the RICS website, as is the Global Red Book. And within the Global Red Book, there's a copy of the International Valuation Standards as well. So you should have access. Those are freely available to everybody, clients, members of other professional organizations, along with a whole raft of other documents which you might find helpful. So I'm going to draw breath there now, and apologies for the technical problems in the delivery of the slides. Okay, so that should be back to the normal screen. TC.
Ben, thank you very much. Very enlightening, and it's interesting around the complexities that you mentioned. Never a simple exercise, and especially with intention to circumvent. And I think that's where the kind of standards play an important role, because it is a benchmark against which we at least can judge, how these things are working.
Yeah.
For those who want questions, just before you comment, Ben, for those who have questions, please use the Q&A box at the bottom of the screen. If you can type your question in there, then we can read those out. We've got one so far. Sorry, Ben, did you just want to comment?
Nope, that's fine. All good.
Then I'll go to the question that we have up to now. This is from Vaynant, who says, I agree that the financial indicators are important, but we found that part of property inspections, we have a digital tool, and that we make it mandatory for our valuers to not only mention any polluting sources, but also any suspicious activities. These qualitative data is invaluable to combat this issue. We found the qualitative data to be more useful in many of our examples in this respect. Is this your experience as well?
Yeah, so really great question, and the easy answer is yes, absolutely. And this is one of the challenges I think that the industry faces with automated valuations or non-inspections, desktop valuations. And again, this is part of the challenge for the valuer. It's the valuer's responsibility under the international standards and the Red Book to make a decision whether a desktop is appropriate for the purpose of the valuation. Now, we are certainly in lots of parts of the world coming under greater pressure to do more valuations from a distance, if I can call it that way, or more quicker valuations, quicker turnaround times, without the inspection, which perhaps as an old valuer I love to do. I love to visit the property, I love to read the leases, and then I love to come to my opinion of value. But that is time consuming. I would argue it's more accurate, but the accuracy might not actually be a really key player in the decisions that are being made. excuse me. For example, when I bought my house, the valuation was probably 95% of the surety that the bank had, that they could get their money back if I stopped paying. Whereas actually now, certainly in UK, the valuation's probably only 50% of the risk weighting analysis that the bank does. They'll look at my credit score, they'll look at much more about my employment, which is tied into the credit score, etc. So there's a whole raft of other metrics which they'll use to decide whether to advance the loan or not. So the valuation has sort of shrunk in relevance in that space. But I was also, TC, at a legal conference 6-8 weeks ago, might be a bit longer, that they were the legal conveyancers were becoming very, very concerned that they were going to be held responsible for making some of the assumptions which they have done in the past, particularly around environmental issues. So sort of making the assumption that there aren't any environmental issues which affect the property. And they were really becoming very concerned that making that type of assumption would lead to difficulties in the future, in that a court of law is very unlikely just to accept that they could relinquish any responsibility by making assumptions. And therefore, actually, they were quite keen to reinstate inspections of properties, because that actually passed that responsibility down the line, and the valuer becomes the eyes and the ears of the both the client and the lending institution. We've got a very big challenge in the UK, again, with modern slavery. You know, it's a similar issue to the money laundering issues, that modern slavery issues, and you've got an obligation to report. And so if you do an inspection and you see 20 beds in one small room, you should be starting to say, well, actually, you know, there's a challenge here, and reporting it. If you haven't been to the property, if you're purely simply relying on some papers which have been presented to you or sent over to you, then those issues aren't going to be picked up. And the legal profession could then inherit that problem because they've made assumptions that these things are all right. So I think that issue about inspection is a really important one, and quite, as you say, that evidence on the ground of something not being quite right is part of a valuer's skills. I was often asked when I was working at the university, how do you remember all of these things that you've got to do when you go to a property to value it? My answer to that is, well, no, you go with the assumption everything's okay, but then you start to see evidence of things which aren't okay, and you need to follow those evidence trails to establish what the problem is. But so as soon as you sort of see something which isn't quite right, then you've got to follow that trail to its end to deliver a verdict. And I think that applies to this type of activity as well.
Yeah. Thanks, Ben. I mean, Venant agrees. He says, yeah, thanks, agreed. We do an inspection for first valuation and then do an inspection at intervals. While the valuations can be automated, we believe for ESG purposes and especially environmental issues, we make inspections mandatory. So we are on the same page. So I think, very valid point in terms of that. I mean, I also just wanted to ask a question, Ben, in terms of that. You know, you've mentioned the legal profession, you've mentioned IFRS in your presentation and all of that. You believe, is there enough closeness, and are those professions together with the valuers profession and generally are all on the same page and working closely enough in being able to identify these issues, you know, jointly? Because, you know, a lot of the time evaluation is the one part of these things, but there's also other gaps that kind of pop up, and if the professions are not working together,
I think again, I think that's absolutely critical. I don't think they are. I think that in many parts of the world there's still a sort of, this is my territory. I'll do this. You do your job. It's one of the things I really noticed quite very strongly in various parts of the world, not just sort of developing and developed nations, is actually we don't all understand what we all do. The banks have risk managers, but we don't fully understand the matrix which they use to come to their decisions. Valuation is part of that, but sort of understanding the language which we use as professionals is absolutely critical, and we've got to have that better understanding about the holistic nature, because if you've got any gaps, that's where these types of illegal activities are going to go, between the gaps. As I keep saying, and the audience will be fed up with me saying it, some of these people are really sophisticated in the way they operate.
Yeah.
And they're going to be looking for those gaps, and they're going to be looking for a valuation firm who hasn't got a proper money laundering policy in place. They're going to be looking for a legal advisor who doesn't do the same amount of due diligence as perhaps somebody else does. So I think that conversation between the professions, and I include the accounting profession in that, as well. I mean, I don't notice it. I mean, one of the big things that's been happening in the UK recently is not directly associated with this, but is the recognition that the auditors now, there's somebody else looking at the valuations. When I used to do lots of valuations, nobody ever questioned me. I did the valuation and I signed it and it went off, and very, very rarely did I get any comeback about the legitimacy of my valuation. Whereas now, actually, it's going into somebody else's system, and there will be several people at various stages of the process who look at my valuation, and they'll come back, and with big pushback in the UK that some of the valuers are saying that the audit profession now keep coming back on valuations for financial reporting, and that we haven't actually built that into our fee. So so again, there are a number of the firms here who are sort of saying that within their fee structure, they will agree to X hours worth of work and communication with an auditor, but if it exceeds X hours, then they charge an additional fee. And so, but that's absolutely fine. I mean, we shouldn't be talking about fees. I appreciate that, but overall, that whole process has got to be working. Really, what I'm saying is that just providing a valuation and walking away is no longer an option. You've got to accept that somebody else is going to be looking at this very closely. And signing off as appropriate for whatever it was used for, whether it's in the bank for secured lending, whether it's a review of the bank, because again, I think things have changed so much that when I first started, probably if you had a mortgage, the bank would take that mortgage deed. It might have got syndicated somewhere, but not very sophisticatedly. It would more likely sit in the bank's vault for 25 years until I've repaid it and then give it me back. Well, that's certainly not been the case for 20, 30 years, in that these documents are being syndicated around the globe and resold. And I mean, and I guess if the bank goes bust, they're very unlikely to sell off all the assets individually. They're much more likely to sell off the loan book.
Yeah, that's what's happening.
So, the loan book gets, I mean, there are obviously one or two property companies in some difficulty at the moment because of the interest rates, which have
Mm-hmm.
changed so quickly, who were borrowing money at very cheap rates, who suddenly find now actually where they were getting a return from the real estate previously, actually it's a financial drain on them at the moment.
Yeah.
And again, that perhaps gives that opportunity. I mean, I know that there are people, certainly in the UK, buying offices at debt rather than value. So they're actively seeking out people or organisations who've got assets which are draining resources,
Yeah.
finding out how much is owed on that property and just bidding at that to take it off the people's hands.
Yeah.
And we just got to be careful that that doesn't enter the valuation chain as comparable evidence, because it doesn't work out as market value because somebody's acting under
It's
duress.
forced.
Yeah,
Yeah.
quite. So again, all those issues, but also some of those people, that money might be from some of these illegal sources, which we need to. I mean, I'm not casting aspersions, because this is where you have to be really careful, because you start to talk about these things, you perhaps paint a picture which then tarnishes the genuine market participants, in transactions. So we need to be really careful on that side, but we need to be really vigilant as well.
Yeah. No, thanks, Ben. I mean, and quite right in regard to the accounting firms. I think more and more the whole issue around valuation, they are taking seriously in terms of that. I think sometime what I'm finding is a bit of the briefing, and that's why I asked the question about closeness, because sometimes just part of the briefing from the accounting firms to valuation firms, I'm not sure is of the clarity maybe required, but that's something that one needs to look at. There's another question here from George. Is the RICS working together with anti-money laundering regulating bodies to have a common understanding that benefits and protects its members across the globe?
Again, really, really good questions. Our regulation team, our standards team are always in contact with various government departments regarding these issues. As I say, the guidance is there. There's quite a bit more guidance on the website with some case studies, etc., for to aid understanding. But yes, we're in contact with many of the organizations. I personally am not, but the organization is, to try to make sure that this is relevant. And as I said during the presentation, I mean, you and ITC have to do our money laundering training once a year.
Yeah.
And I'm pretty sure it's purchased, and it comes from our HR department. So, but I'm pretty sure it's a standard purchase, perhaps with one or two RICS slides and questions added to it. So I don't think it's fairly generic identification of challenges and issues that we should be looking for as we go through our daily jobs. And I think that's one of the things that is most difficult, that we're all busy people working, trying to do our job, which is difficult enough anyway, and then somebody comes along and asks you to say, well, it's being used for money laundering. And you say, well, I don't know. How am I supposed to know? But you've got to have it in the forefront of your mind, a bit like some of the bias issues that exist.
Yes.
That you have to recognize that you have biases within you, and that you then need to count for them and make sure that they're not impacting on your professional judgment. And the first way to do that is to recognize you've got those biases in the first place. So the first step on the money laundering thing is to recognize that there is a possibility that this valuation that you are just about to do could be being used for money laundering purposes. So are there any, is there anything there that should just raise your next level of consciousness to ask the next level of questions? But
no, very valid. Ben, thank you. Are there any other last minute questions or comments? If not, then I'd just like to say thank you once again to Ben Elder for making the time available. Thank you, Ben. It really is appreciated, and been a very enlightening discussion and hopefully stimulated some thought. For those of you that attended, thank you for attending and really appreciate it. If you would like to, Ben's obviously provided the detail, the link there in terms of where you can access information. And if you want to know more about the RICS, then please feel free to visit the rics.org website. If you're interested more about the valuations, the standards, or membership, or just any general information, please visit the rics.org website. Once again, also thank you to the Academy of Construction and Real Estate for putting all of this together. It's been great as RICS to partner with you, and we look forward to doing more webinars in the new year. We will hopefully try and plan this in advance and put a program together. So we look forward to your participation in future events. Matsia, thank you very much again. And to all that attended, great. Have a fabulous festive season. Spend time with your families, and Ben, you as well, and enjoy the colder weather up there than where we are. But stay safe. That's the most important thing.
Absolutely. We had a big dump of snow last weekend, so 4 to 6 inches. So it was good fun. I didn't quite get the sledge out, but I thought about it. But no, great to see everybody, and I hope it was interesting. Please, keep in touch, and thank you everybody for participating, and thanks TC for organising. Much appreciated.
Excellent. Well, thank you very much. Take care.
Thanks. Bye, guys.
Bye-bye, everybody.
Bye, everybody.
Bye-bye.